This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and this is the simple support line that I've been using on the pair for the past several reports. We can see the break below it, and this was a trade I recommended there on a test of the previous support line, which then acted as resistance, and now prices have sold off from that test. So moving forward here, if you're still in this short position, I might look to take profits, or at least profits on a portion of the position, maybe down near the recent lows, just beneath that 88 figure. But moving forward, I would still continue to hold at least a portion of the position moving forward if the sell-off continues to the downside. The next chart is the Aussie Kiwi, and the rally off that 38.2 fib level is continuing right now, with prices moving above that 126 figure. However, on the daily chart, this is the daily chart, and let me zoom in a little bit. Prices have left behind a long wick on the daily chart, so if you're still in this position, the high of that candle is 126.77, so I might look to take at least a little bit of profits, maybe somewhere above that 126 figure. Again, thinking that this could be at least a short-term reversal with the daily candle leaving behind that long wick to the upside. The next chart is the Pound Swiss, and as I mentioned in yesterday's report, I was stopped out on a short trade here that I recommended a few reports back, and now I'm sort of just waiting and watching on this pair, looking for this longer-term support line to act as support sometime in the future. However, prices are about 600-700 pips away from this report right now, so I'm just keeping this on the radar screen. Of course, volatility has been high in the past several months, so a 700 pip move is not out of the realm of possibility, certainly within a few days or so. The next chart is the Euro Swiss, and prices have continually found support on the the previous resistance line of the bull flag, and this is a classic bull flag pattern, and we can see that prices broke out above it and have been now finding support. As I mentioned yesterday's report, the only problem is that this line decreases by about 20 or 30 pips each day. However, on the daily chart for yesterday's candle, it looks like prices did just draft a doji, so I would get a little more bullish at this point in time. The trade setup, in my opinion, and this is part of the problem. So this is the doji right here. So if we're going to enter on the doji, on the basis of the doji candle, we would place our stop beneath the low of the doji candle, which would be about 50.80. However, what I don't like about that is then I'm placing my stop and it's just above a area that should act as support, which would be, again, the previous resistance line, now acting as support as it has for the past several sessions. So, but that's what I'm looking at this pair right now. I'd have a tentative bullish bias against the low of the doji candle, which is about 50.80. And again, over the next 24 hours, I'd look to get an entry close to that. Excuse me, let me get that price again. Next to that 50.80 low. Again, and it really depends on your individual risk parameters. Right now, with prices 51.18, that represents a favorable risk-to-reward ratio as the upside. If prices do hold that low, I think prices can get to that upper resistance line here. Let me zoom out to get a better view, and that would be the target of that long trade. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.